Welcome to our video on how to invest in the stock market for beginners. The stock market can be a daunting and confusing place for those new to investing, but with the right knowledge and approach, it can also be a great way to grow your wealth over time. In this video, we will cover the basics of the stock market, the different types of stocks available for investment, and the terminology and concepts that beginners need to know. Additionally, we will discuss the importance of diversification and risk management in the stock market. By the end of this video, you will have a solid understanding of the stock market and be well on your way to making informed investment decisions. First, let's talk about the basics of the stock market. The stock market is a platform where publicly traded companies sell shares of their stock to investors. When you purchase a share of stock, you become a part owner of the company and are entitled to a portion of its profits. Additionally, owning a share of stock also entitles you to vote on certain matters related to the company, such as the election of board members. It's important to note that the stock market is not a physical place but rather a virtual marketplace where buyers and sellers come together to trade stocks. Next, we'll discuss the different types of stocks available for investment. There are two main types of stocks: common stock and preferred stock. Common stock represents ownership in a company, while preferred stock typically has a higher dividend but less voting rights. Common stocks are the most popular type of stock and are the type that most people think of when they hear the word stock. Preferred stocks, on the other hand, have a preference in terms of dividends and assets in the event of a liquidation, but typically have less voting rights. It's important to understand the difference between these two types of stocks and how they fit into your overall investment strategy. We will also cover the basic terminology and concepts of stock market that beginners need to know, such as bull market, bear market, dividend and capital gain, risk and return, and many more. A bull market is a market that is on the rise, while a bear market is one that is on the decline. Dividends are payments made to shareholders out of the company's profits, while capital gains are the profit made from the sale of a stock. Understanding these concepts will help you better understand the stock market and make informed investment decisions. It's important to remember that investing in the stock market carries risk. The value of a stock can go up or down, and there's no guarantee that you'll make money on your investment. That's why it's crucial to do your research and diversify your portfolio. Diversification is the process of spreading your investments across a variety of different stocks and other types of investments, in order to minimize risk. By diversifying your portfolio, you can reduce the risk of losing all of your investment in case one stock performs poorly. One way to diversify your portfolio is by investing in mutual funds or exchange-traded funds, ETFs. These are pools of money managed by professionals, and they allow you to own a piece of many different companies at once. Mutual funds and ETFs are a great way for beginners to gain exposure to a diverse range of stocks without having to do extensive research on each individual stock. It is important to have a long-term perspective when investing in the stock market. Short-term market fluctuations are common and should not be a cause for panic. It is important to have a clear investment strategy and stick to it, even when the market is experiencing turmoil. Always do your own research before investing in a stock. This means reading company financial statements, understanding the industry trends, and keeping an eye on news and announcements. It is also important to consider the management and leadership of the company, as well as any potential risks or challenges it may face. It is important to keep emotions in check when investing in the stock market. It can be easy to get caught up in the hype of a hot stock or to panic during a market downturn. However, it is important to remember that investing is a long-term game and to make decisions based on rational analysis rather than emotions. Please comment, like, share and subscribe.